Okay, and so in this video what I'm going to do is review an analysis I made which didn't play out like I would have wanted to, and then through this video also look at how dealing ranges can be used in conjunction or in addition with the market maker business model, market maker buy model, market maker sell model, to help give logical places of placing stops and targets to help increase profitability with trades, or get logical points of targets so that we have good trades. And so in the previous video, in the previous analysis, I marked out this huge fair value gap using the fib, and then looked at how we moved from discounts to premium and then premium to discount. And then in the daily, inside the daily range, the daily time frame I looked at this range, this low to this high, because price has moved from the top to the down to the top again, and then was coming here. And so because price had traded into the discount, I was anticipating that would break through this daily bearish fair value gap and then continue the upward trajectory and fill at least the remaining of this gap, and then probably reach this range high. But then price failed to break through and then continued lower into the discount of the range, right? Into the discount of the range. And so this is where the focus is going to be for this video: how we can use the price action in the lower time frame to mark the buy side of the market maker buy model, which would help us place reasonable targets and stops, right, on the other side, on the right side of the curve, to help us target reasonable places basically. Yeah. And so inside of the 4 hour, let me reduce this a bit so that it becomes good. So here we have this high to this low, and then we see that bearish daily fair value gap was actually at the 50% right here, at the 50% of the dealing range, right? It was at the 50% of the dealing range, and if you look at it carefully, I think it might be hard to see, so let me increase this a bit. You see that there's also a fair value gap. This fair value was partially filled by this up candle, so we go in there and fully fill the fair value gap before we drop down, right? So going into the 1 hour and then the 50 minutes, so inside of the 1 hour, it wouldn't have made much sense with getting an entry with the way I trade, right? But you see, we have this up candle, we traded down, so this might be a bearish order block for someone, and then they can enter off of this, or this two consecutively up closed candles, and then that would also be an order block for someone. And then with the retracement here, or this retracement here, they could have entered and then gotten this. But then what interests me more is what happened on the 50 minutes, which I would dissect to explain what I am trying to say here. Good. So this is what I wanted to share exactly. And so when we look at this, we see that this is the daily bearish fair value gap, rejected from the 50% of that 4 hour dealing range, rejected from the 50% of that bearish fair value gap as well. And then going into that bearish fair value gap, we created this bullish fair value gap, and if my previous analysis should have held, this bullish fair value gap should have held and then continue to push price up, but it failed, got disrespected, inverted as well. then we got this bearish fair value gap printed inside in it, and so price comes down, retraces to the low of the bearish fair value gap, daily bearish fair value gap, and inside of this fair value gap, inside of this inverted fair value gap as well. And then we started targeting, sell side liquidity. And then when you look at this, price targeted this place, that, and that as well. Now if we should scroll all the way here and assume that this price action is or was not available to us at that time, we see that this part, entire of this part, forms what? The buy side of the curve. Let me mark that out. Forms the buy side of the curve. Forms the buy side of the curve. Let me make this properly. Okay, so we have the buy side of the curve right here. Let me try to make it a bit neat. Okay, that's good. I think that's good. The buy side of the curve right here. And then once we start to scroll, to the right of this, we see how price starts targeting, but before I do that, let's take this. Okay, and so we take the high, we draw the range on the 50 minutes, the high to the low, and then we see where these places are, the sell side liquidities are on the buy side, so that it gives us a sense of what we could target, right? So we have this relatively equal lows here, right, which should act as a magnet to drop price, and it's close to the 50%. We have this low here, and then we have the 25% DRT level here as well, which is in discount, and currently we are in premium. And so we trade down into the 75 DRT level here, run into this fair value gap, into the low of the daily bearish fair value gap, then we started targeting lower prices. So we are looking at this place, this, and then the 25 DRT level. And so now let us scroll to the other side and see how the sell side of the curve played out, right? So we see how we targeted the sell side of the curve right into the 25 DRT level. You see, we mark that out with the ray, so right into the 25 DRT level. And so if we are taking a trade from here, I'll stop here, that would have been a safe stop, and then targeted this level, the 50%, this swing low, or the 25%. That would have been a very, very good trade. And then looking at this, so let's just then see, assuming we took it from here, this would have been the trade. If you adjust our stop a bit, this would have been it, and that would have been a 1:3.38 R, 1:3.38 R, right? Then this would be the sell side of the curve. This would be the sell side of the curve. That would give us the sell side of the curve. So we see how, using dealing range theory and the market maker buy model, market maker sell model, helps us to mark up, really good places where we can put our stop and our targets, so that we are able to get, good places to target for, a profitable trade. And so this is what I basically wanted to look at in this, with this video, or in this video. And so, yeah, all the best.